This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, hello and welcome back to another Research Talks here from Stockbox with Alan Green. So, Alan, it's good to be talking to you again. How have you been?
Yeah, it's been a funny old week. I think even at this stage, people are starting to wind down for Christmas, and of course, you're seeing all this, all of the festive stuff lying around. And I know we're resourcing tomorrow, next Tuesday. Looking forward to that. That should be good to sort of get a. It'll I think give us a good feel for just how the markets are and the expectation levels for the market, and you can get a sense from investors at the show how they feel about the way things are going to go. And obviously, it would be helpful if we could have a central rally to go with that too. But early days on that. I'm not calling that one yet.
No, well, we'll have to see, but it would be good to gauge the vibe next week, won't it? I mean, I was at a bit of a reception just prior to the event, which was for the event, and the message I was getting was, it's just like people want to have a good time. So I was thinking, okay, right, so people getting in the Christmas mood, like you say. I mean, there's no doubt this year's been pretty tough on the markets. I think particularly for mining companies to raise capital has been very difficult. So I'm not really expecting a great mood. Maybe people will be sort of looking to meet up and try and sort of put the year behind and maybe just wind down a little bit and look forward to 2025. But of course, I'll see you there next week. We'll be doing lots of interviews, so people can definitely please tune in. Lots of live streaming while we're there, and we will get a good feel for what the sector's like. I know we talk about it quite a lot, but of course the valuations in the mining and commodity space are extremely low. So can it get worse? Possibly a little bit more, but I think it's really pretty at the bottom at the moment in this sector. Maybe not in other markets, other indices, but the mining sector is definitely, very, very nearly bottomed out.
I think so.
So yeah, you agree. Yeah, okay. So we'll get a vibe next week and see what people are saying. That will really help, I think, set the tone perhaps for next year. But today we're going to be talking about a couple of exploration companies. Botswana Diamonds. James Campbell, of course, was on Stockbox this week. Been a little bit quiet. The diamond market's been, again, pretty tough this year. But he did tell me that diamond expert and trader, one of his good friends who's the most cynical person when it comes to the diamond market, is actually starting to call the bottom now. That guy, I won't name him because he's in the shadows, but he's based out in Antwerp in the Diamond District. So again, potentially there's some signs of the bottom coming there. And Anglesey Mining you're going to talk to us about as well. But let's start off with Botswana Diamonds, just get a sense of what the company's all about again and where they're active.
Sure. So of course, Botswana, as you rightly say, Mark, James Campbell, Chief Executive, been involved with the business for many years. Has a lot of experience running other companies in the region, a vast experience in Botswana and in South Africa. Chairman John Teeley, of course, very well known to investors. He's again a perennial veteran of the industry. African Diamonds, Pan-Andean, Minco, Persian Gold, and also he's the chairman of the Cooley distillery as well. Then you've got the FD, James Finn, 20 years also experience in exploration. And Botswana is very much set up as a junior exploration company, and their mantra is to go where the geology is best. And that is, of course, working around existing mine infrastructures, old mines, where works have previously been undertaken, because, of course, with the tools available to mining companies and geologists nowadays, they can go in and breathe new life literally into these old mines through discovering perhaps the continuation of strike from an existing geological anomaly or what have you. So that team I just covered were involved in the discovery and sale of the Karo Diamond Mine by Africa Diamonds, sold to Lucara Diamond Corporation in 2010 for $90 million. Botswana Diamonds was formed when Karoo was sold, in actual fact, so they've sort of evolved from that. And then, of course, the the company in 2020 acquired Sakaka Diamonds. This is in the Kalahari, where the company holds 3 prospecting licenses, and of course also owns the KX36 assets, which of course is across many sort of hectares of which owns many hectares of kimberlites in the area. Kimberlite pipes are, of course, these igneous rocks that contain diamonds. That's where many famous discoveries have been made. Of course, the Star of Africa, probably the most famous diamond of all time, 83.5 carats, was discovered in a kimberlite pipe. So Botswana are developing these assets. They have the Mabwe diamond, also prospecting licenses in the Kalahari, and also in 2021 the company acquired an asset in South Africa, the Thorney River project, and a number of developments have taken place across these assets throughout the year. So the share price of Botswana currently is trading at 0.21 of a p. It's traded as high as 0.55 of a p, as low as 0.16. So we're just off that year low. But the company is on the verge, I think, of moving things forward. As you rightly pointed out just now, Mark, the diamond industry has been bumping along the bottom, but I think as a store of value like gold, we've seen how gold has progressed, and that move hasn't been really reflected in the junior mining sector. Also, the diamonds are, I think, expected to make a recovery as a store of value next year. And when you get an uncertain macro climate such as we have at the moment, then of course anything tangible where you can store value is going to be of interest to investors. So throughout the year, the company has worked to develop, firstly, its assets in the Kalahari, and after the company raised 250,000 at 0.32p in August, the company started to develop or work an AI program across its database. Now, Botswana Diamonds owns the second largest diamond exploration database in Botswana. Contains 375,000 kilometers of geophysical data and data and logs on 32,000 drill holes. So of course it's impossible for a single person or a team even to go through that. So they've employed an AI program to trawl through that to shortlist and come up with potential assets, which is a really interesting exercise. And I think shows if some good work is achieved from that, we're going to see hopefully some decent prospects lined up for the company. The company has the KX36 asset. That's a total of some 17.9 million tons at 35 carats per 100 indicated, and the team have just announced that they've received authorization or environmental authorization to drill at the KX36 asset. This is going to give them the potential to upgrade the existing resources that I've just outlined there, and some 60 kilometers from KX36 is also the historical Gagu mine. And that's going to be important. So we're going to see hopefully some of the kimberlite pipes, perhaps the strike from the existing assets may well extend, and we may well see some additional value added to the Gagu mine, which of course is also owned by Botswana. Now, the company has also progressed its assets in Marsfontein, South Africa. In October, it's announced that it received a prospecting permit for 5 kimberlites at the Marsfontein asset, and these are adjacent to the Thorney River property owned by Botswana Diamonds in Limpopo, South Africa. The area is some 900 hectares. There are six different kimberlite bodies that have been identified there. They have a primary target there, which is known as M3, which is 100 meters long by 10 meters wide. And in the words of John Teeling, it's almost ready to mine. So that's a really exciting development from there. And most recently, the company has also received its environmental authorization through for the Thorney River asset. So everything to play for. The company is on the verge of a huge drilling program up in the Kalahari at KX36, and also set to drill at the Thorney River, or the asset at Marsfontein. So we're going to hear more news in the coming months from James Campbell and John Teeling about those developments. And let's hope that we get some good news sooner rather than later. But given that they're drilling into kimberlite bodies that are already well established, I think the prospects are looking pretty exciting at this juncture.
Thank you, Alan. Yes, well, as I spoke to James earlier in the week, and he did say we'll be speaking at least a couple of more times before the end of the year. And then, of course, news out this morning on what he had talked about with regards to the Thorney River there. But the AI thing is really quite interesting, I think, isn't it? I mean, that he was talking to me very sort of, enthusiastically about that and what that could mean for the exploration going forward, really, and it might even mean that it could open up other opportunities in terms of not just diamonds, for example. It could show other commodities that are worth following there. But yeah, that environmental authorization obtained there from Thorney River. So that's obviously a big piece of the work that needs to be done, and then the rest we can expect, I think, to see results of this AI, and then hopefully the planning of a bit of an exploration program this year. James did say on the interview that it has been a tough year generally. The diamond market's been pretty bad, but it is showing signs of recovery, and. Really, you've got to deal with the market you're in, haven't you? And they've sort of been not so active this year, but that's maybe the best thing, when the market's not on your side there, to conserve cash and do what you can at a lower cash rate to prepare yourself for when the timing is good to get active again. So I do get a feeling that we'll be hearing a bit more from James in Botswana. But thank you for giving us the reminder of the case of Botswana Diamonds. It's been a little while since we've spoken about them.
But I think just to pick up your point on the AI program, Mark, I mean that is a really exciting development, and I think it's going to be obviously watched. Investors are going to follow that closely, but I think also, many others in the space, other mining company CEOs and companies operating not just in that region but elsewhere will be watching keenly to see what the program comes up with. As I said, 375,000 kilometers of geophysical data, drill logs and data on 32,000 drill holes. I mean, that's a vast amount of data. And of course, for AI to trawl through that and perhaps throw stuff at you that you hadn't been aware of, or coming at you from left field. It just works on logic, but of course is able to trawl through that in a relative fraction of the time compared to a team of humans doing it.
Exactly. Yeah, exactly. Okay. Well, thanks, Alan. So let's talk about Anglesey Mining then.
So Anglesey Mining, I was privileged to visit the site just under a year ago. Actually, I went down with a team of analysts and had a look at the existing work. So Anglesey Mining is the 100% owner of the historic Paris Mountain. That's not Paris as in Paris, France. That's Paris, Parys. And this is an old historical mine, and in the 1700s it was the world's largest copper mine. All activity ceased there in 1910, but various companies have come back and worked it until the Anglesey Mining, there's one of the older companies listed on the stock market, basically bought the company or bought Paris Mountain and they have been working to develop it since that time. But Anglesey isn't a one-trick pony. It also has a 49.75% stake with a first right of refusal to increase to just over 50%, and then to 100% for the Grängesberg iron ore project in Sweden. and there's a PFS that's been commissioned in conjunction with Swedish partners, already has a post-tax net present value of $688 million. And there's estimated cash flow post-tax of some $2.08 billion. So that's, it's a huge project. Of course, I'm aware at the moment that iron ore isn't exactly seen as sexy. I mean, we've spoken about Cadence Minerals and the Amapa project and the work they're doing there, and it's simply not reflected in the share price. So we're seeing a similar issue here. And also, aside from the Grangesburg asset, the company also owns 12% of Labrador iron ore mines in Quebec in Canada, which is it's an iron ore. It's a series of mines that they produce 3.6 million tons between 2011 and 2013, and the asset base over there involves several mineral claims also with potential to develop. But the company is looking, I think, to do deals at some point to maybe partner or farm those out, or certainly work with other companies in order to develop them, because the focus is 150% on Paris Mountain. Now, the initial resource base, and this was from a PFS which was undertaken in 2021, is 5.3 million tons of copper equivalent, and there's also a bunch of other metals in there as well, zinc, lead, and silver, and others, and that's the combined base metals total of a measured and indicated 10.8 million tons at 2.5% combined base metals, and that's inferred. So that's already established. In terms of peer group comparison, it's not dissimilar to the Golden Grove asset in Western Australia, which is owned by 29Metals, an ASX listed company, and also the Rosebery in Tasmania, owned by MMG Limited, listed on the that's Min Metals Group, listed on the Hong Kong Stock Exchange. That's 50 million tons. So the potential at Paris Mountain is huge, and the size and scale of the asset's huge. When I visited last year, we had a tour of the old works there, and also into the core shed where we were shown core from the drilling campaign, which was identified, which identified a zone called the Northern Copper Zone, and drilling was underway there late last year, early this year, and from that, the geologists there have confirmed a significant zone of mineralization. With hole 3 that was drilled and reported on in May this year, further to hole 1 and hole 2, a zone of 90 meters at 0.57% copper equivalent was identified. The continuity of mineralization from holes 1 and 2 was confirmed, and as the chairman Andrew King said at that point, Paris Mountain is demonstrably the largest and most advanced copper project in the UK, and also with substantial resource upside still evident. So the asset is considerable, and of course you've got the asset on the ground there, then you've got the environment. Now, I know for a fact there is huge support locally to bring the mine back into production. The actual area itself, Paris Mountain, the original iron ore mine, has been used for film sets. It's a very lunar landscape because it's an open pit mine, and it's been used for film sets. The film Mortal Kombat, I think, was that they used the old Paris Mountain mine to film a number of scenes, and it is quite a spectacular place. But the infrastructure is all there. Added to which, a route to ship the ore from Holyhead. It has also been agreed a road route, and there's also opportunities to utilise various jetties at the Holyhead harbour to ship the ore out once it's mined. But of course, before it can do that, the company has to go through a process of planning and also establish a new PFS, which the work that's currently underway is undertaking. Now, in August, Anglesey announced it has submitted an environmental impact assessment scoping report to North Wales Minerals and Waste Planning Services, which the chief exec Rob Marston, who I interviewed earlier in the year, said was a significant milestone for Paris Mountain and Anglesey as a whole. In September, the responses from the analysts were received back very much broadly in line with expectations, but the environmental impact assessment scoping report sets out how the mine will be put together, obviously how the waste will be dealt with, all of the issues that the councillors will want to see. Once from this point onwards, we then move forward to establishing and upgrading the PFS, which is widely expected to significantly add to the existing resource that's in place. And then, of course, it opens up all sorts of opportunities. Mark, we were talking, of course, about what's happening in Cornwall with Cornish Lithium and the other mining companies down there, the support that they've received from lenders such as the UK Infrastructure Bank. I think once Paris Mountain is at that PFS stage, then the potential is really opens up, I think, to engage with all sorts of schemes to fast track and develop the project and the asset. And there's as I say, support from the region and also from local government too. So Anglesey is at a very exciting point. However, of course, as with any mining company, it's not reflected in the share price. We're seeing a very lowly market capitalization at the moment. The share price is trading below a penny. It's traded as high as 2p on the year after the news from the initial drill holes from Paris Mountain that took place at the start of the year. But we're closing the year at a real low. So I expect the share price to go one way from here because everything is now in play.
Well, thank you very much, Alan, for bringing us up to speed on Anglesey Mining there, a nice homegrown resource company in the UK. And I think next week will be quite telling. I'm hopefully getting some interviews with ministers or people involved with the UK mining side of things, and we'll get a sense of how the UK is perhaps growing or positioning itself or trying to encourage, let's say, investment in mining, in homegrown, in the UK, basically homegrown mining. Of course, the Cornish, there's a huge Cornish pavilion going next week as well. I think there's 6 Cornish companies, so there's six UK companies there from Cornwall. Plus, I think there's Panther Metals and Fulcrum there as well. Anglesey are not going, of course, but another UK-based mining exploration company. So well, thank you very much for that, Alan, and I'll see you next week, and we'll get a bit of a vibe of what's going on in the sector. But hopefully, 2025 is a better year for the sector in general.
I hope so, Mark.
Well, now we're going to be talking about Mila Resources, that's a ticker MILA, with Dan Flynn, who's been joining us recently here on the Research Talk. So it's good to be talking again. Dan, how have things been for you this week?
Yeah, thanks for having me on again, Mark. It's been a good week. Lots going on in the markets and everything. And I just thought right now would be a good opportunity to talk about Mila, as I think there's a lot of interesting stuff potentially coming forward for this company.
Okay, good. Okay, Well, take it away then. Tell me what the interesting. Well, first of all, just introduce the company, and then we can talk about the interesting stuff that's coming.
Yeah, definitely. So Mila's a resource exploration and development company focused on Australia, and I think a good place to begin with the company for now is with the 3 exploration assets it's recently signed an option over. So these are gold exploration projects, and I think they could quickly generate some news flow that could light a bit of a fire under the company's valuation, which currently sits at just under 3 million as of when I last checked. So the assets are based in Queensland in Australia, and they're called Yarrell, Monal and Mount Steadman. And what I think is particularly attractive about them is they all look really promising, but they've just sort of fallen by the wayside. They've never been properly developed. Yeah, they've just been overlooked. So beginning with Yarrell and Mount Steadman, a company called Many Peaks identified a variety of new zones of gold mineralization within a 15-kilometer trend at Yarrell in 2023. And they also hit 8 meters at 2.6 grams a ton gold from just 8 meters below the surface at Mount Steadman that same year. And that built on exploration in the 90s that had already identified shallow gold resources. But the thing is, although both of the projects looked really promising, Many Peaks never exercised this option to buy them because at the time it needed to reallocate resources to another part of its portfolio. I can't remember what that was, but it's just one of those things. Like I imagine if it had the capital, it would have taken them forward, but it just couldn't at that time. So and similarly, Mona, which is the third project, I don't think Many Peaks did anything there, but intensive exploration in the mid-90s found long intervals of near-surface gold mineralization, which again hasn't really been followed up. So Mila's effectively taking these 3 projects, swooping in and picking them up at a decent price and picking up where its predecessors left off. So we don't know what the result from this will ultimately be. But what we do know is the first initial rock chip sampling the results of that have been pretty good. So work at Yarrell returned 6.5 grams a ton gold and 2.7% copper in the historic resource area, along with good grades in areas beyond that in the wider license area. And Mila also returned peak values of 26.8 grams a ton gold and 24.6 grams a ton gold at 2 targets at Monal. We also know that Mila has publicly said it has enough cash to cover its first-year exploration commitment at the assets. So I think it'll be interesting to see what this work, it's 230,000 of exploration, to see what it ultimately yields and whether it can start to give us some idea of how much gold and in turn value these assets could offer.
Okay, so what stage would you say the projects are at the moment then?
They're not they're not really early stage. They're somewhat de-risked by the historic work. I think it's one of those cases that a lot of exploration companies have now where, you know, these projects looked good back in the day, and in the intervening decades, exploration technology has come on a lot, and now it's a lot cheaper to explore these projects for their full potential, and you can easily drill into areas that previously were not accessible or were, you know, difficult to access. So I think that's where the value really could come from here.
Okay. And in terms of the near-term sort of catalyst then, so they've got enough for the first-year exploration. So is that sort of throughout 2025, or where are we sort of in that timeline?
Yeah, so I think Mila's plan is just to get this all done ASAP. Really, it's I believe it's next. The next thing it's doing is ground surveying across all 3 of the projects, which it's going to use to provide insights into geology and in turn the mineral potential. And I think the real goal of that will be of value to potential investors will be the high priority drill targets it identifies. You know, if it starts delineating these and they're looking good, then and they can get the drill bit turning pretty quickly, then that's where you start getting the physical evidence of gold, and you can start to see how big any ore bodies of the projects will be.
Okay, so ground surveys and then getting into sort of defining drill targets to drill throughout the course of, was it the first half, do you know, or the second half of next year?
I'm not sure exactly. I don't know if they've given a timeline. But I know they're trying to get this off the ground pretty quickly. So and they've got a year to do that initial work. So presumably anything they're planning will be done in the next 12 months. Yeah.
Okay. Good.
Yeah.
So just in terms of the sort of the the value proposition then, or the investment case? What's your take on where it is now as a sort of a speculative play on gold in the resource sector?
Yeah, so these three assets are attractive, and I think they might lead to some renewed interest in Mila after a quiet period. But we can't forget that the company is underpinned by its flagship asset, which is called Kathleen Valley. And that's based in Western Australia. So Mila owns a 30% stake in that. And the opportunity it presents is in a lot of ways, it's quite unusual, and it's also a bit complicated. So bear with me while I just quickly run through that. So Kathleen Valley is based in one of Australia's most prolific lithium districts. It neighbours another project, which is helpfully also called Kathleen Valley. This is owned by Liontown, which is Australia's leading lithium developer and has a market cap of some 2 billion. I think it's a bit more than that now, actually. So Liontown recently began producing spodumene, which is the rock that hosts lithium from its Kathleen Valley lithium project. And now it wants to see if that mineralization spills over onto Mila's ground. So it's entered a JV with Mila to do just that. So in exchange for 80% of the lithium rights to Mila's Kathleen Valley project, Liontown will fund up to 2.2 million Australian dollars of lithium exploration. And I think this means two things for Mila, which could potentially be very valuable. So first, it gets a free carry on exposure to any lithium that's ultimately developed and produced at Kathleen Valley without any financial input. So that's good. So the company at the moment retains 10% of the lithium rights based on the 30% it currently owns in the project. It has the right to increase this to 80, and I believe this would increase its exposure to the lithium rights to 16. So, if it's got a lot of lithium, that 16% could be very valuable. But what's also of use to Mila is that Liontown is open to sharing its exploration data with Mila, and that will support Mila's own exploration efforts for gold at Kathleen Valley. So this is a polymetallic project. So as well as being located in known lithium districts, Kathleen Valley neighbours and shares a similar geology and mineralization with a project called Bellevue. Bellevue is one of Australia's highest grade gold mines. It has a mineral resource of 3.2 million ounces at 9.9 grams a ton gold. So Mila's been working on this theory that Kathleen Valley itself holds a lot of gold for a while now. It completed drilling and exploration in 22 and 23, which yielded pretty promising high-grade gold intercepts. So what will be interesting now is if it can take those intersections that Liontown and those samples that Liontown produces from its own lithium exploration efforts, and they show gold potential as well. Because again, Liontown's effectively getting a free carry on advancing its gold exploration efforts without putting any money in and without diluting its exposure to any gold upside that ultimately gets realized.
Okay, so we've got the existing asset there that we would say sort of underpins it. That's the Kathleen Valley asset there, which is predominantly lithium, but potential gold credits. And then the other projects brought in there in Queensland, a more early stage exploration, blue sky on the gold there.
That's right. I mean, Kathleen Valley is still fairly early stage, but
what
I like about it is it sort of pairs that. Mila came into it as a gold asset, I believe, and this lithium credit, this extra potential, has sort of been handed to it, really, and it benefits from the exposure to the lithium itself, and it can leverage the exploration for its own gold exploration efforts. So I think it's a bit of a win-win for Mila there.
So what's the current sort of valuation market cap of Mila then, and how has it sort of performed over recent years? I'm trying to get an idea of perhaps where it sits on the the value proposition sort of curve.
Yeah, absolutely. So currently it has a market cap of 2.7 million, and it's down around 40% this year, which is the case for most exploration companies, as you well know.
Right, yeah.
But it's not too bad. It's held its value reasonably well. And what I would say is, I think there's been a bit of a lack of news flow up until the acquisition of these assets. So with the company reinvigorated now, I do see potential for it to build its profile. So I think the news flow from those Queensland assets could quickly generate some interest, particularly if they're positive, obviously. Another thing that I think will be a real value event is at Kathleen Valley, Liontown is currently awaiting the conclusion of environmental and heritage surveying. So if those will go through, then what it will do is set the ball in motion for a lot of progress of the project, presumably quite quickly. So Liontown will be able to get to work on drilling and surveying and whatever it needs to do to advance its lithium exploration. So that could yield some promising results. But as mentioned before, it will also provide Mila itself with a lot of data it can use for its gold exploration. And again, that stands to add a lot of potential to the project. So I think the conclusion of those surveys could be a bit of a bellwether moment for Mila. Don't know exactly when that's going to happen, but what I do think is one of those ones where, if you were looking at it before, you could benefit from the sudden surge in interest. And in the meantime, like I said, it's ticking along fairly well. It had cash of 1.4 million as of 30th June. Recently said it has the funds to cover that work in Queensland. Obviously, there's a potential of a raise, particularly if it wants to acquire another projects. The company seems to always be on the lookout for new things. It runs what it calls a post-discovery exploration accelerator model. And obviously, you've got gold, which is performing strongly, so that's underpinning everything. So all in all, I think what we're waiting for here is exploration results from the Queensland assets and the conclusion of those surveys at Kathleen Valley. From there, assuming the results are positive, I think we could see the profile of this stock grow pretty quickly.
Perfect. Well, thank you very much for introducing Mila Resources to us today, Dan. It's not a company I'm very familiar with, but thank you. It's certainly put it on my radar to have a bit of a look at. It does sound like perhaps they will have a decently active 2025 exploring, particularly if they are fully funded for that first year of exploration. But thank you very much, Dan.
Thanks for having me on, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.